Hey guys, PJ back with Exotic Car Hacks, and in today's video we're going to take a deep look at what really happened at Excell Auto and CNC Motors and why it is going to keep happening in the dealership world. But before we get started, let me pretext a few things. And the first one is that this is going to be probably a 20-minute or so video. So get ready for a very educational lesson on what happens to dealerships and why they end up going down like these two did. Secondly, we're going to understand the evolution of these mistakes and how they take us from a simple mistake into a significant problem. Just like we watched other YouTubers talking about the Excell issue, but breaking it down more as we all perhaps have something to do with it and how normal consumers are allowing dealers to get away with it. So we're going to talk about if that is indeed true or not and how does it all play in together. And finally, the other thing that we're going to be talking about and looking at is how you as an individual can literally protect yourself from these types of issues, because this is something that is becoming a more common theme because it is being publicized. But reality is these problems have been plaguing the auto industry for quite some time, and it is partially because of the laws that allow it to take its place. So we're going to look at how you as a consumer can protect yourself from ensuring you don't fall victim to yet another one of these problems. So let's start by talking a little bit about the idea that I teach people how to hack exotic cars, which is get in and out of exotic cars without losing money. But one of the main and important concepts of my platform, Exotic Car Hacks, is to teach individuals how to have a good and exciting experience when it comes to owning an exotic car. Because I can tell you that there is nothing worse than actually owning an exotic car and having such a terrible experience that you never want to do it again. And so part of our platform teaches people not only how to get in and out without losing money, but it also teaches people how to ensure they have the right support network to repair cars, and of course they have the ability to get low insurance rates and everything else that comes with the car, ensuring they have a good experience for the 12 months of ownership, making them want to do this again and again. So this is something that a lot of dealers don't care about because they obviously don't check the car. So they sell you a car and they go, hey, just drive this and whatever, and then go and you figure it out. Here in our platform, we work a little bit different to ensure that you as a consumer don't basically fall victim to shady dealership practices. And while today we're going to look at the financial element of it, there are so many more that you can learn about, and also how to protect yourself and have a great experience by becoming an Exotic Car Hacks member and going in the link in this description and actually joining us, or at least taking the free 90-minute training that will break down for you why you should be doing that, and then joining us either way. So let's take a look at Excell Auto and CNC Motors and understand what has happened and what that evolution was. You guys may have noticed that we here at Exotic Car Hacks had done quite a bit of collaboration with Excell Auto 5 to 7 years ago when we originally started, and about 2 years or so ago we completely severed that relationship, partially because of practices like the ones we're going to talk about, partially because we saw the writing on the wall and kind of saw the same scenario coming out, and it just was too risky for us as an organization to continue being involved, so we kind of walked away. Now, many people could argue the same about Doug DeMuro and CNC Motors in its original state, which I'm sure it was a good dealership, and over time kind of getting worse. So let's look at what happens over time, because this is the topic of discussion today, something that, again, people aren't talking about. They're talking about the scams and everything, but they're not talking about this word, which is the entire problem itself, and it's called the float. Now, what is the float? Well, the float is the exact reason dealerships basically go under. And it's the amount of time between a transaction and the finances of that transaction taking place. So let's understand the model in a simpler way. So let's say, for example, you buy a car from a dealership. So this is your car, right? And forgive my drawing, whatever. You buy that car today, right? So today's date is what? Like April 25th, right? So I'll just use that as an example, right? So April 25th, you purchase a car from a dealership. On this day, you wire the dealership $300,000. Okay, we'll say 300K here. You gave them 300K to buy this car. Now, there's two ways you're going to give them 300K. Either you're going to wire them the money, or you're going to get a loan for the car and finance the car. Both are good angles. So by the time you pick up this car to the time you receive a title, is about 30 days. This is why you get what you call a 30-day, in most states, sometimes it's a little bit longer, temp tag. So basically, on April 25, you buy this car, and you pay on that day. But you don't receive a title till 30 days later. That is what is supposed to occur in a normal dealership. Now, because sometimes these things take longer, sometimes dealerships issue 2 temp tags, giving you a total of 60 days. Now, these 2 temp tags are gone directly through the system at the DMV. A 3rd temp tag would have to be handwritten and would have a very good justifiable reason why the transaction was not able to be completed within the 60 days. But the only way a dealer would get caught for these 3rd temp tags would have to be some level of maybe audit or something happening from a DMV level to basically look at the dealership and say, why are you issuing so many temp tags? So if a dealer issued too many temp tags that are the 3rd ones, they would end up on a list basically of dealerships that are most likely to be audited because there's a lot of red flags. But a lot of dealers understand that they basically have what they call 60 days to figure out the problem. Now, here is where the problem really starts. Let's assume there is now a maximum of 60 days between the time you purchase your car and the time the dealer has to send you a title and registration, because you're technically legally driving your car with a temp tag and temp registration. Well, here's what occurs. The issue isn't where your money came from, which that is a problem all of its own, but rather where the car money came from before that. So there's a couple of ways this car could have gotten there. It could have been consigned. It could have been bought, right? And here's the other part. It could have been floor planned. So what does that mean? Well, real simply put, a consignment is when someone lends the car to the dealership and says, please sell my car. They would leave the car there so that viewers of the dealership can come and take a look at the car there. So they believe that the owner owns the car of the dealership. So the dealer owns the car. They're more likely to transact and trust with a dealership than a person. So a person would then agree that a dealer has its own list of clients that would be interested in the car. The car would be consigned, and the dealer would then pay a fee, or maybe 5% or whatever it is, to the person. Like they would charge that fee to themselves, and then anything else goes to the owner. Typically, people consign cars when they don't like the trade-in value of the car. And as a result of the trade-in value of the car, well, they choose to consign it because the dealer then does not have to buy the car and put their money. So therefore, they don't mind having a beautiful car in the showroom that they don't pay for, because they're just making money off your money. So they don't care. And then the other part is it could have been floor plan, meaning it could have been a car that was where the title was sent to a 3rd party to get a loan on that car because it belongs in the inventory of the dealership. Or it could have been bought, and where those 2 things are different is it could have been bought from a 3rd party, which was either a consumer, or B, it could have also been bought from another dealer, right? A wholesale deal from another dealer. Now, the difference between the bought part is that most of these cars are bought on credit, and I'm going to tell you what I mean by that. When you sell a car to a dealership, when you go and trade in your car, or give them the car, sell them the car, you typically, most people have some type of loan or something on the car, and you give them a leeway of 30 days to basically pay off that loan, make your credit right, meaning make the payment as agreed on the contract, and basically then take ownership of the title. But you are doing that transaction that day, meaning that you may not even get paid either until, if it's consignment, you won't get paid till the car is sold. If it's bought, they might have a floor plan where they're able to get a credit company to basically pay for that car, and they're able to send the title there instead of keeping it in-house. Now, this gets kind of complicated because there's so many ways a car can be bought. Sometimes dealers buy cars from each other and don't really pay each other until weeks later. So let's say I wanted to buy a car from so-and-so dealership across the street. I would say, hey, well, you send me the car and I'll pay on credit terms in 15 days, or I'll send you a check on Monday. Things of the sort. So there is still also a gap there. So what's happening now is that the problems occur in the gap between these transactions. Because what happens is when you buy a car from a consumer, or even when a consigned car is sold, it might have a loan on it. And while you will pay the owner the difference between their loan and the car sale if it's there, you typically won't pay the loan for this 30 or 60 days. And that's where the floats begin to get really weird. You see, because the car is bought on this day with $300K. But the dealer goes, well, wait a minute. It's really hard for me to get lending and have more cars on my lot and make more money. So while I got $300K to sell your car, right? Like you gave me this car. Let's say this is the consignment car right here. You gave me this car to sell. This $300,000 is what a consumer paid for this car. Now, I'll give you a good example. Let's say the consigned car is a $200K loan and $100K in equity. So now the $300K should technically be made whole by paying the owner $100K of the equity and then paying off the owner's loan, therefore giving the dealer a title, transacting on that title, and that's what you call a perfect transaction, right? That's a typical good transaction. But here's where the problem happens. The $300K used to purchase the car is absolutely used to pay the equity here in the owner. The reason is because the owner won't really submit or forward a title to the dealership to transact on it unless, because they can't because the loan owns the rest, but the person won't really relinquish their car without some kind of payment, right? So usually the person will get this payment first and will say, okay, well, you made me sign papers that you're going to pay off my loan and you gave me the $100K equity in my car. That is the typical scenario that is supposed to play out. But the dealer goes, well, wait a minute, I don't have to technically get this new guy title for a total of 60 days. Well, if I can move a car on an average of 15 days, that technically means that for 3 cycles, right, for 45 days, I could use that $200K that I owe your bank, and I could technically just start flipping other cars because I don't have enough money in my inventory. So I'm going to, instead of paying off your bank and doing a one-to-one transaction and then closing the transaction, I'm going to take that money and I'm going to now buy one car, sell it, get the money again, buy another car, sell it, get the money again, etc. But here's where this problem intensifies and magnifies. With every other purchase I make, I'm putting my dealership yet in another similar situation. So it's basically creating this loop at some point where I have $800K in debt, for example, because I have all these cars to pay off. And I'm basically buying them on credit terms with someone's money that should have been closed way earlier, 60 days ago, on their transaction. So remember, at this stage, I still don't have a title because the title is with the bank here, right? So I technically still can't provide the original purchaser of this car a title here because the money is now stuck in another car. And let's say I sold a car in between and I did a one-to-one transaction, fine, I got the money back and I can pay it. But what if I got greedy and all I kept doing is recycling that 200, just going over and over and over between other consignment deals, etc. Well, all of that creates this backlog of debt. And what happens is with the backlog of debt, well, in the meantime, I'm making these margins, right? And in the cars, I'm making 20%, 10%, etc. Well, that's paying for my cost of operations and my lifestyle, right? So what's happening though is over time, I'm basically using new money to pay off old debt. So I have to sell car number 2 with someone else's $300K to start covering the old debt. But it gets way worse than this. So this is like the beginning of the scam. So what ends up occurring is now I have all of this money, and at some point the second car I sold covers this first transaction so I can wipe off this guy, pay off his debt, and go. But remember, I built another $800K and $600K in debt from his original purchase. But now I just took in another $300K, so I got to put the second guy through the same 60-day loop so I can keep fueling the new cars that I'm getting in. So the gist of the problem is that basically I am floating money that I shouldn't be floating because it wasn't intended to be for new cars. But because I'm out of money, because I don't have either good lending available to me, because small dealers in America do not have good floor plans. They have this stupid thing called Next Gear or something that is just absolute trash. So what happens is that a lot of these dealerships that are not franchised are ending up suffering. So if you ever see a really nice exotic car dealer and you're wondering why they're associated to Karma or Lotus franchise, it's usually because the requirements to be a franchisee for those are significantly less, but it opens up a ton of opportunities for floor planning and opens a ton of opportunities for lending. So that's the only reason people team up for that. But basically the point here that I'm trying to make is that new money is basically used to cover old money. What does that remind you of? A Ponzi scheme, right? It's a basic, simple Ponzi scheme. I can't cover my debt, so new money will basically cover the old debt, so I can hide because after the 60 days, I started getting on the red flags. So as long as I can keep all this Ponzi scheme within a 60-day range, I'm really good. And it's usually doable. And it's doable for a couple of reasons. Because in the last 2 years, the car market was really exciting. The average time a car sat on a lot was 3 days, if you were a good dealer. Now, previous to COVID, it was anywhere from 60 to 90 days. This is why the exotic car industry and the luxury car industry has seen such a boost. You're now turning cars over in 3 days instead of 60 to 90 days. So that money is coming back 300, 300, 300 every 3 days. But remember, you're getting 60-day floats, right? So now the spread and the debt is increasing significantly. And you're flipping, you're making, and you're enjoying the money, right? So what occurs is these Ponzi schemes work until that goes away now. Once we no longer have 3 days, and that's done, and we're back to 60 or 90 days, all of these other debts come due. And there is no new debt to cover all the other debt. So this is the gist of how dealerships start to get in real trouble, right? Basically using the word float to make their money and fuel their lifestyle in between these two things. And when their float is too bad, well, they just sell a car and try to recuperate as much money as that they can. But here's where it gets basically even more criminal. And we're going to examine the part in the front here instead of anything else. So it's still a question of a float, but it's a little bit more criminal in essence because it's kind of an internal model that dealers use to hide kind of like how their float works. So I'll give you a really good example. We're going to talk here about the buying, the credit, and consignment here and how this goes from a kind of controlled problem that works for dealers for years to a completely out of control problem and turns into fraud. So when you floor plan a car, you basically have to submit a title, okay? So you submit a title to the floor planning company who then funds you for that specific car. Their intent is basically that this car cannot be sold, obviously without a title. But here's the problem. Remember, these floats take their place, right? And here's what floor plan, like when you go buy a car from a dealership and the dealer finances you. So I'll give you an example. So you buy a 300K car, right? This is your 300K car. You obtain financing. The bank here pays 300K, right? The bank has, again, 30 days to title. Here's another float being created again. The bank paid 300K today to fuel your car. You drove off with the car, you enjoyed. But they won't be made whole by the actual dealership for 30 days with a title. But they already gave 300K, right? So they gave 300K and you drove away with your car. But again, what happens if this car was financed? What if it was consigned? Again, they're waiting 30 days. Dealer does not have to pay this off instantly. It's going to use that same methodology to float again. So the financing here is again creating a 30, 60-day float. And where the financing happens or the consignment is where things change, right? So here's where or how this model starts to get completely out of control. And this becomes literally criminal. So you take this bank that basically paid 300K for your car and they're waiting for their title. But meanwhile, this car, right, that could have a loan on it, right, then that bank doesn't get paid for 30 days. And they get an exception to the bank. They go, hey, yeah, we were waiting on a title from this other bank that had it financed. So at the 30 days, the dealer sends a check out, which takes an extra 6 days to clear and 6 days to get there, for the amount to the finance company. So he has a record that he sent it in on time. But what he's doing, and he can then send the bank that to show them that, hey, they were waiting to basically pay off the car. They finally got their stuff. Now they're waiting on a title, so the bank gives them another 30 days. So that's how they basically create a 60-day float. Again, right? Like it's a problem within a problem. Doesn't this remind you of the mortgage crisis in 2008? It was just this crap over and over and over. Basically, people just like a problem within a problem within a problem within a problem where the brewing was coming internally, right? So let's say it's a consignment car. Well, what if it's a consignment car? Who's making the payments? The guy's still paying his loan. Well, the bank doesn't have an urgency to get the title either because they have the dealer doesn't because they have 60 days to provide this new dealer, like this bank, the title, right? So the point I'm trying to make is that these floats are all created internally. But let's do something much crazier that gets even more criminal, and I really like this one. Let's assume this car is owned in cash, right? So this is a cash car, which means the title for this car is available today. So here's where the dealer can do something super criminal. Let's assume, for example, what it would do is get the title to this, right? And instead of sending it to the bank, even though the car sold today, it's going to send it to the floor plan company. The floor plan company is going to give them $300K. You see what's happening now? The bank already paid $300K and is supposed to receive this title. But the dealer goes, well, I got 60 days. So what I'm going to do is basically also sell this car to the floor plan company to get an extra $300K in funding. Now I'm taking a $600K out to fund the $300K car. So they basically they ran this scam, right? Which is like they're taking $600K out on a $300K car because they have a title. And what they're doing is they're sending the title to the floor plan company to get $300K because they know they got 60 days before they have to record a lien on the title. And they know they got a 3-day to get the title back from a floor plan company. So they'll basically do that to double up their gain and use that money to then buy cars. The problem is, let's assume, how did they get caught doing this, or where does the problem occur? This is assuming you always have money to cover at the 60-day mark because you have enough money to then pay off and then get that. Doesn't matter if it's the same money or not, because but at some point you're going to have to pay them to get your title to send it there, right? Because you already got paid for this car. That's the key. You already got paid for this car. Now, this gets even more confusing and even more fucked up when you keep adding like consignees and people whose money is actually tied in these cars, and it's not even, they've sold a car that's $300K cash that they didn't even own or have to pay for. So imagine if there's a third party here, which is you, cash owner of your Lambo. You're the cash owner of the Lambo. You're owed $300K. You're stupid enough to have given them the title to your car or a copy of it. They send the car down the floor plan. They put a lien on the car. They get $300K. They never paid you the $300K, but they already sold your car and got $300K. So now they got $300K they own from the floor plan company on the same car. They took $300K out because the car's already sold, and they got to make you whole on the $300K, but the car's already gone. And they're using the 60-day float between all of these parties to basically hope that the future cars can cover these kind of problems. So what occurs is the float becomes the issue, is how out of hand it gets and how criminal it gets based on duplicate titles being issued to floor plans or getting a duplicate title without the owner's consent, only to send it into the floor plan and then use that as bait for, like selling the car. there's hundreds of reasons why this word becomes the problem for Excell and for CNC motors, which has led them to basically going down the toilet on their inability to control their float. So what are the signs you can look for when a dealer is being really bad with floats? Because this is the next level of understanding how to protect yourself, right? I wanted to do a video that was actually educational so that you guys could understand. So how can you protect yourself, right? Well, there's a couple of signs that become very apparent with floats. An average payoff takes 10 days. A dealer uses a 10-day payoff on your sheet whenever buying a car from you. So you own a loan, you sell the car to this dealership, and they have to pay off your loan. They take a 10-day payoff from the bank, assign that payoff to the sheet, and go, that is the payoff, and the rest is yours. Then usually you receive the difference from the bank, not from the dealer. So if a car is $300K, you owe $200K and the 10-day payoff is $205, you'll get a check for $95K, and then the $205 will be paid to the bank. The bank will send you a difference if they paid it off in 3 days, etc. If a bank has not received your payoff in 10 days, that's your first flag. Because like if you go to a bigger dealer, like a well-funded AutoNation or something like that, that always occurs, usually in 3 to 4 days. Now, here's the worst, this is flag 1. Second flag is dealer saying, we only send checks for payoffs. We're in 22. Every single one, except maybe one place, accepts wires. So if you can send a wire out to pay off a car, why do you need a check? Second flag. It's about the time checks take. They enhance the float. Get it? So what else happens? Well, even it keeps getting worse. I could go on for this for like fucking 10 different times, right? So payoff takes 10 days, that's flag 1, right? Anything more. They send out checks instead of doing wires. Again, now you have a second problem, right? Now, here's the problem. Dealer claims payoff, no proof. Payoff is over 10 days late. Your bank hasn't received it. They have nothing pending in their queue. You go to the dealer and you say, I'm sorry. What occurred? I'm still making payments here. I'm about to be late. Well, I paid off your car 3 days ago. Great. Could you send me a copy of the check or a screenshot of the wire so that I may ask my lender, the person that originally had this loan, because I took out this loan, I'm still responsible for it till the end, even if I've sold my car. That you may not have known. Even if you sell your car, you are physically responsible for the loan attached to that car and its payoff, even though you're trusting the dealer to do it. So the dealer claims payoff, but they have no proof. Meaning you go back and you say, I'd like to get a copy of something. Accounting can't help you, and you keep getting phone after phone, or the owner just doesn't want to give you this, or has 100 reasons why they don't. Now, one of the bigger tricks in the industry that occurs a lot is dealers that send checks because they're trying to make their floats longer will actually send out labels without checks in them to these banks so that they can give you a tracking number saying the check went out. When in reality, there's nothing in the bag. So basically, the tracking gets there, but it's an empty envelope. So what does it do? Well, then the dealership can blame its team on forgetting to put a check and buy themselves an extra 10 days to do it. But they can show intent was clean because they sent these envelopes out. So the point is, all they're doing again is coming back to this word, float. They're floating money, and they're floating too much of it that they can't afford to pay it back. And the problem is, when you float a lot of crap, well, it looks like you're playing with a lot of money. So if you are floating, let's say 30 million, what's a 50K purchase in there? Nothing. What's a 30K extra watch bought for yourself? What's an extra, 30K private plane ride somewhere to fly? It's nothing, because in the sphere of things, you're dealing with like $30 million, and we're talking about 20K, 10K, 10K, 30K expenses. But remember, you don't really have money, because at some point, what happens with all of this is that every piece of inventory in your dealership is actually owned by someone else technically. And it's only one car away from basically crumbling the entire thing if that car doesn't get sold off. So here are other signs, and the final sign that things are going bad. And this is kind of the reason where things started getting completely out of control for the two individuals or the two dealerships that we mentioned. And the first one is, it's out of control because you start to bring in private investors from the street. And this is the biggest red flag that you need to start looking out for. Every single one of these boutique dealerships might have investors behind it. But when your key investors, the guys that pledge to make your dealership work, that have the capacity to up you an extra mil, an extra $500,000, an extra that, cannot do that or will not do that, there's two reasons for that. One, they don't know the kind of shit you're running. Two, you don't want them to know, so you go here. You basically open up regular people the opportunity to buy into your inventory and help you. But all you're doing is, remember, you're playing catch up because you're like 30 million in debt, but you ain't got no more money. But now, if I gave you 2 million, well, I brought you closer, not to pay off your debt, because you're not that fucking stupid. You already did all this to scam 30, and you didn't scam it on purpose. This is the part that you have to understand. This isn't one of these games where someone's in business that long and they're just scamming people and staying in business. They're falling victim to their own trap. This is the part you have to understand in this. They're falling victim to their own inability to manage their float. They're not intentionally attempting to rip you off. They're making bad decisions along the way where they could choose to pay off the float or pay off a customer car, and instead are taking that money for themselves, their team, their lifestyle. They're not downsizing their team, their cost of operations, buying less cars. Instead, they're doing more. And so they're using more float to create more revenue, to create more profit, only at some point to realize the float is completely out of hand. And the issue with the float is that it's basically investor money that no one wanted to invest. When you sold the dealership your $300,000 car, you didn't say, I want to give you a $300,000 loan, use my car as collateral throughout a loan for the next 3 to 4 months and pay me back a fee. You said, sell my car, and the dealership converted that to, I'm just going to borrow your car and sell it to all these people so I can milk $900K out of it, and then I'm going to make you whole after. But the issue or the problems is that the float and the timing between each of these sectors and their requirements are so wide that it creates this opportunity to basically double and triple dip. No pun intended for all of you that follow what that means. But anyways, so the main thing that I'm trying to tell you here is to understand that these are the flags that basically exist for every single one of these dealerships that's perhaps too small or too big. And when they get worse like that, they start to trigger these flags that prevent you, or should be flags enough for you to early try to get on so you don't get caught left holding the bag. And this is the important part. There were a lot of these signs that were present, and we warned our community internally about the CNCs of the world and the Excells of the world over the last 2 years. But outside of our community, obviously, we're not involved in this, so we have no way of knowing everything and to tell the world what's going on. But what I'm trying to tell you to understand here is that there are little basic things you can do to protect yourself when purchasing a car. And here are some of the ways. Get a title copy. Make sure it's not duplicate. So what does that mean? Get a copy of the title given to you so you can have the title as soon as you pay for the car. But ensure that it's not just a copy that's black and white, but ensure it's an actual copy, like a photo that someone took of the title that is in their hand. That will tell you one thing, that the title hasn't already been copied and then sent off to a floor plan. Secondly, if it is, at least you'll know what your expectation should be. Secondly, the other part that matters too, make sure it's not a duplicate title, because often if there's a scam going on between titles and ownership of the car, ensure that the title is actually in the dealership name. You see, one of the tricks dealers use is to reassign titles on a continuous basis because they don't go to DMV every time they buy a car to convert a title in their name. Now, with smaller boutique dealerships, it does make sense when you're unsure to ask them for a copy of the title in the dealership name, not reassigned. This will prove that they have full ownership of that title and aren't just floating an old copy of a title around to give you fake peace of mind. This is a very basic trick that allows you to take 90% of the problem away. The other thing to understand is that most dealers are not scam artists. Like, while they charge whatever they want for their cars, and while you may not agree because you think it's too much money, it's their right to charge what they want. The scam comes when they steal from you or attempt to defraud you, not just when they charge you a lot of money for a car. It's important to understand the difference. And it's also important to understand that there is some level of trust that goes in, and one of the best things to do, as Rob Ferretti stated in his video on the same topic, is check reviews. If reviews that are on the dealership are talking about people not getting titles, not getting their payoffs done on time, these are very big red flags that this dealership might be going through something very similar here of a float problem. Make sure you check those reviews. And you can check those reviews, and they matter in terms of having negatives. Remember, this isn't about does the dealership have good reviews, because most people don't leave a good review. It's about looking at does this dealership have bad reviews and what do those say. Now, if there's a guy, again, who's just terribly pissed off that he can't get a blowjob in a car, that's great. That's not the type of review you're looking for. You're looking for what is the actual concept here that they're reviewing. Is it talking about the money wasn't there and so on and so forth? So that's a very important thing to check, to double check. But the copy of the title is what's going to really give you that peace of mind and understanding of how it works. But you should still check the reviews anyways, especially if you've never dealt with them. And finally, this is the other thing that matters. The source of the car. A lot of times, dealerships will lie that the car they're selling you is owned by them and not consigned. Honest dealers will not lie. Many times when you call an honest dealer and you ask them for the car, you will ask, is the car consigned or do you own it? They will tell you the car is consigned and it has a separate owner. And you can ask further questions like, does it have a payoff? And have a clear expectation of the time frame it will take for you to physically pick up this car. And this is the key here, is that one, you have to know when you can pick up the car, but two, you have to have a realistic time frame on when you're going to actually get a title. And so this is kind of the problem, and these are the ways you can basically protect yourself from this entire concept of floats and how they're impacting dealerships everywhere. Now, as far as we're concerned, we're very sorry to hear about Excell Auto. You know, a lot of those people that work there were incredibly cool people. Some of them not as cool, but the majority of them were good people that unfortunately got caught in a really bad scheme. And reality is that a lot of times you just have to understand that what happened to CNC Motors, what happened to Excell is the owner's fault, 1000%. There's nothing around that can take that. And there needs to be a level of accountability to that. But it's also part of a really broken system that has no accountability around where titles are. Title fraud is one of the easiest things to establish in the dealership business, and one of the easiest things for someone to get greedy with and play with in order to find more money that they can use either to buy cars or to basically create an enormous amount of money for themselves before calling it quits. So one of the things I recommend in general is to learn more about the industry and to understand more by actually becoming an Exotic Car Hacks member so that you can protect yourself not just around these things, but stay up to date with industry news and the best dealers to use when transacting on your Exotic. But anyways, this has been my presentation on the matter of title flows. Hope you found it educational and it made sense to you. Again, do not forget to like, subscribe, turn on notifications, and please click the link in the description if you want to learn how to hack cars. And let me know in the comments, what did you think? Did you learn something new today? Or perhaps was all of this just a repeat of what you heard on the internet before? Click the link, leave your comment, and I'll catch you in the next video for Exotic Car Hacks.